The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044. This is the Futures Hour. Here's your host, Larry Pesavento.
Good afternoon, folks. I think the most important chart that we have today is the first one I posted into Tiger TV is the silver and gold relationship. As you can see, silver is incredibly weak. Gold has been very, very strong, but gold is approaching the 61% retracement of the high we made back at around 1400. Oh dear, I guess it was several months ago. That comes in at 1319, and we've been as high as 1315 so far today. The chart that I'm looking at right now that I've posted into Tiger TV is the U.S. dollar chart. That's basically 53% weighted with the euro. And as you can see, we are completing that ABCD pattern that has been here. We've been waiting on this for quite some time. The euro went down yesterday, made a lower low at 133.40. Today's low has been 133.43. So whether it's going to kick out that low or not, we'll have to wait and see. But the dollar index is right up here at this 81.80 area that measures everything together. So it's going to be, very, very important of what we're looking at this particular time. Now, the question arises that someone posed the question is, if silver is so weak, versus the gold, why would you buy silver versus the gold? Well, if you look at each one separately, you'd want to be buying silver because you don't have to risk very much. You risk below today's low, which would be the 61% retracement. However, what I'm looking at is the question that poses in my mind is if gold is so good, and it's certainly very, very strong compared to silver, the ratio, you can see that silver is lagging very, very badly. So if gold would start to weaken just a tiny little bit, silver's in big trouble. That's the way it appears when I'm looking at these at the charts, the way that I'm looking at them at that particular time when I'm watching these. Now, if I have a chance here, I wanted to dear, I don't think I'll be able to do it. Shucks. I may be able to do it to break. I wanted to show you a ratio spread of two stocks to show you the difference of what type of markets you can be in. But I should be able to pull that up very, very soon, and I'll be able to, at least I hope I will, and I'll be able to show you what I'm watching. But I think that is one of the most important things to watch is this U.S. dollar. The euro has very, very strong support at the 133. Long term, it's incredibly bearish, but for short term, it has a chance to have a pretty good move, to the upside, just in short covering. That would be the whole thing that what you'd be watching. Now, I wanted to just bring up some interesting things on a technical basis of where we are, with the markets, because so far what we've done is we've made a perfect 786 retracement here in the S&P versus the low that we made just several days ago. I'll put this in so you guys can take a look at it, guys and girls, of course. But today's high was very, very interesting because it was a perfect 61% retracement from the high of August the 4th, just 3 days ago. We took out the highs of the 5th by just a point or two, and then we've headed down. That means if we go below 1905, 6 points from where we are right now, we're going to be looking at that target that we were talking about just the other day, which comes in at around 1870 in the S&P. And if you think our market is bearish, you should take a look at the German DAX index, because that is one sick stock index. It's already taken out the lows that it made earlier in the week. So this is not a good sign from the German side, but we're still very, very early in the day here with the stock indices. And of course, if we get above the 1926 level now, that would tell us that we could easily get up to 1947, which would complete a large ABCD pattern that would get you to the 61% retracement of the original high that we made just, wasn't very long ago. So it'll be interesting to see how we handle this level at 1908, which is the the 786 retracement of that range from yesterday's low to today's high. The key here is that we took out yesterday's high and we didn't go anywhere. We just stopped dead in the tracks. It was also on good news. I forget which report it was, but the market just stopped. And this brings back to the analogy that Basil talked about going with the tide. When the tide is really strong, it doesn't make any difference. That driftwood is going to be pulled in, but if the tide is, really weak, you'll never see the driftwood again. So the driftwood is floating in the stock market here in the United States, folks. So we have to, keep a real close eye on it, because I think, given the fact that all these things are beginning to turn one at a time, of course, makes us wonder, if maybe the Bradley model is going to be correct this time, and will start to move dramatically to the downside. Now, the next chart that I think is the second most important chart, and these are not necessarily trading charts, because we have a lot of different opportunities in some of these things. I'm just looking at the overall, how it affects all of us. That's really the thing that I'm watching, is the fact that it's affecting everyone. And the next one is probably getting more news than the dollar index for sure, because it's the most actively traded. The euro is the most actively traded, but the 10-year notes, as you can see, the 10-year notes have now broken decisively above the highs of June, and that sets up a big ABCD pattern, about another 3/4 of a point higher, up in the 126 level. And if we get into a situation where Russia becomes very aggressive, or something else happens, and we start to get a flight to quality, then you could see these notes and bonds really start to move higher. I sometimes give a class at the University of Arizona here in Tucson several times a year, and one of the questions that they posed to me was, how does the Federal Reserve buy all of these Treasury bonds? Well, it's very simple. They print money. If you look at your bills, go into your pocket and pull out a $1 bill or a $5 bill, and it'll just say right on there, Federal Reserve note. Now, the Federal Reserve is not a part of the U.S. government at all. It's a private bank, and they take these and they buy U.S. Treasury bonds, and that supposedly pushes the price of the bonds up and puts money into the economy. That's the theory behind it. Now, they've never done like what they've done recently. This has never been done in history, where they flooded the market with $3 to $4 trillion. No one knows the exact amount, but this is how it's taken. So we'll see if this is going to be the case. We've heard from Rich McTeer, who was the former, I believe he was with the Dallas Fed. I think that's who he was with. But he talked about the boiling frog. If you put a frog in the water and start to boil it, by the time he realizes the water's boiling, it's too late. And I think that is what we're up against here. And I think that's the outlier event that could cause some, really bad things to happen. I'm not, trying to scare anyone, but these charts look flat out bad, folks. I mean, just look at your chart. If we go below 1905 today, or 1900 in the S&P, we're looking at a price level at least 3% lower. And take a look at the German DAX index on your spare time. Do some homework, like Jim 21 says. Defy human nature. Do the work yourself, and go and look and see how some of these foreign markets look. We've been talking about it for a long time in here, but they look really sick. and ours has been the strongest. So we have to be really careful here, not to give a lot of money back if that's the case. The fact that we made a higher high than yesterday's high in the S&P on really good news and couldn't go anywhere is a really bad sign. And as Basil pointed out with that VIX index, it's not backing off at all. It moved up 60%, and it can't even get down to a 382 retracement. So these are things that are telling you that the market has some really the tide is not only that, but it's a tsunami. There's a potential tsunami here because if this thing starts to really quiver, there's so many people that are still long, and we still have this high margin debt out there. It's not going to be fun. We'll see. And that's just my 2 cents worth. You can send the change to here, Tucson, Arizona. Actually, you don't have to send the change to Tucson, Arizona, because we were able to our property in Tucson or in Hong Kong finally sold. We had a piece of property in Hong Kong up on Victoria Peak. It was one of the nicer lots. It's a 3,300 square foot home, and it sold for $22,000 a square foot yesterday. That's a grand total of $72,600,000. Now, if you believe that that was my property, I still have 2 shares of the Brooklyn Bridge that I would like to sell you this afternoon. So contact me, and I'll give you those 2 shares at a good price. But somebody actually did sell, and somebody actually did buy a 3,300 square foot home for $72 million on the top of Victoria Peak. Now, the top of Victoria Peak is probably one of the most beautiful. I have seen very few places in the world that are more beautiful than that, because it shows all of Hong Kong Harbor. You can see China, Macau, most of the islands. It's just spectacular. And but can you imagine $72 million for a house? I mean, Steven Spielberg's house here in California is a sale for $125 million, but it's 35,000 square feet. So you can see the difference. But $22,000 a square foot, wow. If that's not near the top of the market, then Isaac Newton better revise his laws of motion. That's what I would have to think of anyway. But this is due primarily to the money that has come out of China, and they're certainly cutting down on the graft and corruption. It's already hit the Macau casinos, where they've business has really dropped in Macau on the gambling, and they attribute it to the fact that they're clamping down on some of these big gamblers that come into China and actually roll the currencies over is what they're really trying to do. Now, on yesterday's show, we talked about the crude oil market. By the way, we're going to have Rich Anderson here for the second half to talk to us about the grains, but we wanted to talk about the crude oil market because we're right at this the same level that we were talking about yesterday. We're within about 40 or 50 pips of the exact 61% retracement. It's up on the day just a little bit, but it's very, very close in this area. So we got to take a little break here. We got the Dow down a little more than 50, and gold is screaming.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Okay, we're back, folks. And I wanted to post a chart here of the New York Stock Exchange Index. It's a daily chart, and we've taken out the lows of yesterday. And so far, we have stopped exactly at the 61% retracement of the April 15th low. So if the market is going to stop going down, it's going to have to do it right now. Because if we get any weaker here in the New York Stock Exchange Index, it's telling us we're going to be heading down towards, the 786 level. Now, I've also had a request to take a look at the IWM, because that has been the market that has been the strongest on the way up here of these things. So we'll take a look here at the IWM. Give me a second here to put it into the Tiger Den here, and we'll be able to see it without any trouble. You can see we came down to the 786 here on Monday, and right now all we're doing now is making a little bit of a pullback at this level. So what we have happening now is we've got the New York Stock Exchange Index setting exactly at the 61% retracement. We have the Russell is still above it by $1. That comes in at 110.40. It's trading at 111.38, so that's still holding above last Friday's lows by quite a bit. So we're at just a really, really key level today in the market, and the $64 question is whether we're going to stop here or it's going to capitulate to the downside. To me, you have to give it a little bit of time because of the strength of this move coming down has been, quite strong. We haven't had a really good correction like this since February. And usually what happens is when they correct a lot more than one would actually start to anticipate. When we have Rich on at the break here, we're going to be talking about the grain markets and also a little bit about the meat markets, of course, and we'll see what's happening. Someone asked me a question about the Ebola problem that they're having now, and frankly, folks, I really I don't know anything about that kind of stuff. I have a pharmacy background, but I haven't done anything in that field for so many years. I have a lot of doctor friends, but that's something I don't talk about. I don't know how much they know about it, but it doesn't affect me right now. Maybe someday it will, but I don't know. I will say this. I think it was 2002 or 3, I don't remember the year. It was 2002, I believe. I was in Guangzhou, China, speaking for the Merck at 2 of the universities there, and that's when the SARS epidemic broke out. And I was there during the 3 or 4 days when it was really hitting the news, and we didn't know anything about it because we weren't seeing anything on the news what was happening. I got out of the country without any trouble at all, and by the time I got back, I'd heard about it. But I was actually in the city. It was right around Easter time, and the reason why I know that is because it was a spring holiday, and the train station across the street from the hotel had 2 winding rows of people around the train station, of people waiting to get tickets to take the train into other parts of China to visit relatives, because it was the spring holiday in China. So I remember that very vividly, and yet I didn't see anybody wearing masks or anything like that, and but that was really a big thing. But compared to what's happening with other parts of the world, with the murders that we have in Chicago and the people dying in Afghanistan, I mean, that's terrible. We lost a general this week in Afghanistan. We haven't lost a general in a war since the Vietnam War. That's very, 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 very unusual. So we do live in interesting times. But let's get back to the markets. The key one here to look at is this dollar index at the 81.80 level. We're approaching that. Keep an eye on the euro at 133. If we get there, that should be the bottom of this move, and then we should get at least a 2-point rally, and then we would look to be short the euro once again. The British pound is still holding the 168 level, which it's been here for, 3 or 4 days now, and so it's going to be quite interesting to what happens, with this one. So we'll watch it. We've had a little bit of a rally in the grains and the soybeans and the corn, and we've had a pretty good rally in wheat. It's had a better rally of the market, so we'll watch that one a little bit closer, and we'll see what happens with that. But with the commodities, to me, the biggest event here, just from a commodity standpoint, is the fact that silver is just not able to rally in the face of this huge rally in gold, folks, because these have a correlation of better than 95%. That's just really amazing. Okay, we'll be back with Rich Anderson after the close. Dow's still under a little pressure, and gold's still strong.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, we're back, and we have our friend Rich Anderson on the line from Anderson Capital Management. Are you there, Rich?
Yep. Hi, Larry. How are you doing?
I'm okay, pal. I'm glad to see this volatility coming back to these markets because it really is fun to see them jump around a lot. That's
oh yeah,
especially when you see huge moves like we're having in gold and stuff. Anything you would like to comment on before I start asking you a few questions?
Well, I mean, I think the big news today is that Russia's banning imports of ag imports, against U.S., Canada, EU, Australia. Since 2012, imports of U.S. beef and pork from Russia have been basically zero. I mean, they had a ban on these products because of ractamine as a feed we use in this country, and they didn't like it. We did start, I think we've had 4 months now where we've shipped them a little pork. It's amounted to about 7% of our exports, but they're only from ractamine-free places, so that'll have a slight little impact. The bigger thing has been the poultry, but, they banned that back in 2009. Prior to that, we were shipping 30% of our poultry to Russia, and that was all the dark meat. But they didn't like the way we used chlorine to basically clean kill the bacteria in the chickens, and they loosened that. And I think the first 5 months of this year, poultry exports to Russia are 7% of our products. We are planning on exporting them maybe 500,000 metric tons of soybeans. Maybe we'd lose that business. So, I mean, we'll lose some, but it's not a major impact on us.
Oh.
The biggest major impact would be if the Black Sea ports, which I mentioned last week, were affected. Now, in March and April, the bids and offers showed that there was a lot of concern. As of this morning, they didn't show any concern. I mean, the cash traders, they're there. They know. There's a lot of people on the border, but they tell me that the people on the border, the Russians that are on the border, are not the kind of people that they had earlier in the year in March and April that would actually be able to administer the towns that they would take over. So that's Rich, what little I know about that. It's obviously a fluid thing.
I wanted to bring back a little bit of history, Rich. Do you remember many years ago, you told me about when Chernobyl happened? Everybody was up in arms about that, and you were the first one to tell me that there was probably a test to see what was going to happen with a nuclear reaction and what effect it would have long term. And it's really been amazing that we're seeing so much of this stuff coming around now. Whether in fact that really was a test, that maybe there is a nuclear event coming that we're going to have to handle down the event. I don't know if that's the case or not. Do you remember? You remember telling me that? That was a long time ago. I don't remember exactly.
Obviously. You learn a lot from disasters, and clearly, they learned how to respond, and they learned that they didn't respond quickly enough, and that's why the two Ebola patients, the U.S. citizens, have been brought into Atlanta, because that's a nasty disease, and they think they have some solutions, and so you've got to take them to your facility so where you can control the environment, know exactly everything that's going on, and maybe you can solve that problem, because while it isn't a huge problem on a numbers death toll, it's a very easily could become a massive problem. I mean, the CDC people say there are 5 other diseases in Africa that are worse than Ebola, but
5 others worse than Ebola. Boy, they brought us AIDS, so we certainly don't want to have any more of the things.
And that was one of the points they made, is that if we had gotten on that epidemic early, when it was being transferred from animal to human, they could have really put a halt to it. But they didn't, and they're trying to not make that same mistake again.
I understand. Now, with this, the thing in China recently where McDonald's has had their meat confiscated because of it was evidently past the dating for use from Chinese producers. Do you see any effect in the meat markets from what happens in China on something like this?
No. I mean, they're very cautious about their food safety, and I think it was specifically targeted at a packer over there that was bending the rules, to say lightly, that was what was going on. So there'll be a little reluctance, just like there was a little reluctance when we had the bird flu going on. Kentucky Fried Chicken, who is huge in China, had sales fall off for a while, but I don't think there's any long-term thing there. I'm understanding that the PED problem that we've seen in the United States has also become a bit of a problem in Japan. But no, that's just a rogue packer. Nowadays,
more political
than anything else. As it gets close to going out of date, whether it be chicken or whatever, that's why broilers, when you go to a grocery store and you can buy a cooked broiler, the reason they're so cheap is because there are only maybe a day or two left on their for sale date, and so they cook them and they sell them that way. That way you get a well-cooked chicken at a very reasonable price. They've learned how to lower the amount of waste in the food product and yet still be safe in this country.
Well,
as an example.
I have a question from someone in the den about the grain markets. Is there any hope for the grains rallying? We had a little rally in wheat here, but beans and corn have done virtually very little.
Right. The wheat, as I mentioned last week, it's a risk premium to the Black Sea ports getting closed, and then all of a sudden we're there's one less player in the world, and then wheat rises. So that's why the wheat's been strong versus the corn. It's also there's plenty of wheat in the world. It's just that the possibility exists that if all of a sudden you took that part of the wheat out of the equation because they're not allowing shipments, then all of a sudden it's worth more, and that's why the risk premium is in the wheat. Corn is a July crop. We had the moisture we needed in July for the most part, unless we had an early freeze. And at this point, you can see the 8 to 14-day weather forecast is relatively accurate on temperature almost all the time.
Yeah, they
moisture
really
is much harder to predict, and you can see out 14 days now. It's 2 weeks, and early frost is just there's nothing on the horizon that would have a concern. The moisture for the beans is the more critical thing. It's an August crop, and we need some rains to produce a major bean crop. We'll have a USDA report coming up, and it's probably going to show, increased yield because it's been almost ideal weather every place in the country this year.
Sure.
As close to perfect as you can get.
That's on the 12th, isn't it?
Yep.
Yeah, that'll be very interesting to see, because the last time we had one of those, that's when you were talking about the beans when they were $12.42, and they went down to drop $10,000 in a month, which was one of the biggest moves we've had in several years. So that was really a great call. Everybody certainly appreciated that, and it was really well timed. Rich, I know you guys, raise cattle and stuff. Is there any hope that we're going to see some lower prices down the road here? It certainly looks very interesting. The fact that the demand still seems to be there with prices as high as they are.
Well, keeping that is true. Demand's been good this year, but keep in mind, I think in Minneapolis here we've only had like 2 days above 90. Chicago with 9 million people in that city has only had like 3 days above 90. When it's really, really hot, it's going to be too hot to go outside and barbecue. But when it's nice weather, especially when you've gone through a winter like we went through last January and February, you want to be outside. But it takes a long time to replenish the cattle herd because, gestation period is 9 months. And we had a 2.5 to 3 year drought in the Southwest. The pastures are finally coming back. So they'll be retaining some heifers. They'll be selling less cows than normal this fall to help, rebuild the cow herd. But it's even if they keep them, then the calves are born in April, and it's another 24 months until they're ready for market. So you're talking a couple of years away. It's just the surprising one is that we couldn't have increased our poultry production, but we had that disease where the fertility was problematic for a large percentage of the poultry population, and that's why the egg sets and the pullets for feeding just haven't been there.
Rich, if there were a surprise coming in any particular commodity, because you draw on a lot of your contacts and your past experiences, and what would you think would be the biggest surprise in a commodity market that would sort of change the name of the game, a game changer? Do you see anything on the horizon that could do that? Something like what you saw in beans. What they're asking you for, Rich, is another home run trade.
well,
I don't want to put any pressure on you.
Let's put it this way. That one was easy to see because the weather was perfect. Demand is only X, and there's just no way. This is out of the ag realm, which is where I mostly stay. But I'm thinking that we're going to see higher interest rates within the next year, and I'm thinking that you see several of these different Fed chairmen, talking about how they see the economy. I basically believe interest rates are going to go higher. It's going to happen within the next year. The bond market had a big sell-off a week or so ago, sold off into the 36s. Now it's rallied back into the 39s on the 30-year Treasury. That's on people that want to get their money into safety. It's a rush to safety because they're worried about what's going to happen in Russia and the Ukraine. I believe that's a temporary deal, and once we kind of get some kind of a resolution and get this solved, I think the interest rates, the bond market is telling you that it wants to continue to trade lower as interest rates go higher. Because when interest rates go up, the bond market goes down.
Yeah, that's for sure. We've had the thing that, how about the flight to quality, though, Rich? That's, what I'm hearing a lot from people is the flight to quality is pushing, the notes and bonds higher because everybody's scrambling for protection, and we're seeing this in the junk bond market. That thing has basically collapsed over the last month.
There's another thing in the junk bond market, Larry. 2 years ago, only about 10% of the, and again, I'm an ag guy, right? So now I'm stepping out of my comfort zone. But 2 years ago, percentage of the junk bond market that was for mergers and acquisitions was about 10%. Okay, yeah. Now it's up towards 40%. Now you've refinanced these companies and you bought these other companies with borrowed money you're paying a high interest rate on, and you don't have nearly the quality of the books that you had because you've just increased your leverage. That's really, it doesn't matter what it is, it's leverage. And so that's part of what I think is contributing to the weakness in the junk bond market. But I'm certainly no expert in that, but that's the way I see it. The best way to make your stocks go up was the mergers and acquisitions. We had a lot of activity, money's cheap, and then you get over leveraged. I mean, you see that if you trade too big in the futures, and it's the same thing. It just happens to be companies buying other companies and using leverage. So that's, I believe, they know interest rates are going to go up, and now you've got a market where the underlying book value and reserves of the companies aren't what they were because they've leveraged out to get their stock price to go, and the prices only went up. And now they're going to find out differently, and they're over-leveraged, and that's why the junk market is collapsing.
Yeah, it's all part of this. Yep.
The aberrations take spans long-term government bonds trading below ours. Spain, has all kinds of economic problems compared to us. I mean, not that we don't, but they've got a lot more. But because the EU is doing basically the equivalency of our QE here, it distorts the value of interest rates and the value of the bonds around the world.
Yeah, that's for sure. I really believe, I've said this a long time, is that this is all about a credit bubble. That's where the real problem lies. It has nothing to do with the stock market is part of it, but it's really a credit bubble for, having zero interest rates for so long that it allows, people to over leverage themselves, and it's not going to end pretty. That's what the history tells us anyway. So we'll have to wait and see.
You go back to Germany. They printed money like crazy in the 40s, and it worked for a short period of time, and then all of a sudden the lights came on, and it didn't work at all. That's
the old boiling frog syndrome. So that's really something. Listen, I wanted to thank you for coming on the show today because I know you're really busy, but it's really good to get your input on stuff. So maybe in a week or so we'll have you back on and we'll talk about the new crop report that's coming out next Tuesday.
Right. Well, I'd be glad to, but as we lead you, we're limit down in cattle, limit down in the feeders, and the back-end hogs will limit down, because if Australia and Canada can't sell it to Russia, they'll ship it here, and it only takes 1 or 2% change to make a big change of price.
Hey, thanks for calling in, Rich.
All right. Take care. Thanks.
Yeah, bye-bye.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN. Now, back to the Futures Hour.
Okay, folks, I'm back, and I've posted into Tiger TV the chart of the Bradley model. But what's more important here, I believe, is the fact that you can see that the Dow is now down below the 786 of the low we made in May. It's below the 61% retracement that we made in April, and it's below the 382 retracement that we made in February. This would start the market to the downside. The Bradley model is telling us that it looks like it wants to go, a lot lower. And so we'll just have to stick with that to see what's going to happen. Now, we're very oversold, so we could have a rally, at any time here. We tested the lows of I believe, Monday in the S&P down at the 1903 level. And we've had a little bit of a bounce from that level, but it's still relatively early in the day. Now, I'm going to use a little bit of Basil Chapman's work here in the VIX index. because we are really at a very, very critical level here in the VIX, because it just does not want to back off. There's a lot of resistance up here at the 17 level in the VIX index. We hit that on Monday. We backed off, and the little sell-off that we had was only a 38% retracement of this big move where we went from 10 and change up to 17, almost a 65% move, in a matter of 9 trading days. So it's telling you that it has a lot of impetus. Now, the last time we had something like that happen was in January, that led us into that February 3rd low into the stock market. So if we get above here, the 17 level, we would look at somewhere between 19 and 21 as the next level in the VIX if it does, start to move. Keep in mind that, fear is a greater emotion than greed, and markets go down faster than they go up. So this is, one of the things that you have to realize, that when you're in a trading environment, that even though long term, stocks might look really good, for a couple of months, you could really get hurt pretty bad at, real critical times. And we're over that. We've been over that time for quite some time now, but we're really critical now because we've broken down, below those key levels of last week. And that's the first red flag that there's something not right in Camelot, at least from a technical standpoint. The Russell has held up relatively well, but some of the others are not holding up nearly as well as the Russell index. The other thing that I think is really important today is that we're very close to the 61% retracement on the gold up here at this 13.19 area. So far, we've been to 13.15 and change, I think almost 13.16. And that is going to be a very interesting spot to look at. And the fact that silver is lagging so badly behind it is not a good sign. We have no indication that open interest or volume is increasing in silver or gold. We'll have to check the open interest on gold today for sure. But we'll have to wait and see on the silver, because it just looks so it just can't even take out the previous day's highs when gold is taking out the highs of last week. Something's not right. There's trouble in River City, as they say on Broadway. So we'll see if that's going to occur. I have one other thing to mention. Is someone asked me if I really did sell a piece of property in Hong Kong for $72 million. That was a joke, folks. I was trying to make a point that it was very expensive at this particular house. It's the most expensive home that's been sold in Hong Kong since the bubble has started over there, and I certainly believe it's a bubble. But $22,000 per square foot. That's about 200 times more here in Arizona. So live every day in an attitude of gratitude, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.